We've seen quite a bit of volatility in the market since the beginning of 2022, largely driven by geopolitical events such as the war in Ukraine, and also plenty of, financial uncertainty that's driven by events such as the hiking of the federal interest rates or the inflation that's caused by, supply chain disruptions due to COVID-19 over the past 2 years, as well as the inflation that is driven by the increase in the prices of oil and a number of other commodities. So as a result of this and plenty of other reasons, we have seen a lot of volatility in the markets recently. The S&P 500 corrected by about 15%, and the Nasdaq corrected by about 23%. In fact, there were a number of days where the Nasdaq actually closed below a 20% correction, and in those days, many people would have concluded that the Nasdaq had fallen into bear market territory. However, in the past week, we have seen 4 straight days of very bullish movements in the US stock markets. Now, what does that mean? Has the market bottomed out? Or are we simply looking at a relief rally of a new downtrend? In this short video, I'm going to share with you what I think and how am I going to respond to what I see. What we have been seeing since the beginning of this year is this whole thing simply a correction of a much larger uptrend, which could potentially then lead to a continuation of this uptrend and the markets continuing to go higher. Or could this be the beginning of a new downtrend? And perhaps this movement that we have seen over the past week might just be a small relief rally before the beginning of a downtrend. There are plenty of signs, right, that a downtrend may or may not have started. For example, what we can see is that the market has printed lower highs and lower lows. And at the same time, we can see that the moving average, the faster moving average, I use 60 and 240 here. The 60 moving average has crossed below the 240 moving average. On the Nasdaq, which we have seen earlier, has made a larger move of 23% downwards. It's a bit more clearer that the market has printed lower highs and lower lows. The 60 moving average has crossed below the 240 moving average. In fact, the 240 moving average is flattening out now. 60 moving average is pointing down. And in fact, the recent price movement has seemed to have stopped at the 60 moving average. So there are plenty of signs here that this could simply be a relief rally before a continued move down. But the truth is nobody knows. This entire 23% movement could also simply be a correction of the much larger uptrend. And from this point on, the market could rally higher. So with that information in mind, what can I do about this? So bear in mind that your portfolio, your risk preferences is going to differ significantly from mine. And because I already have long positions in my portfolio which I have no intention to sell, and if this turns out to be the market bottom, where the prices are going to continue going up as part of the much larger uptrend, then my long positions are definitely going to benefit from this particular outcome. However, personally, I cannot ignore the signs of a possible downtrend. So I might want to take advantage of this to execute a short-term trade whereby I will execute a bearish position in the Nasdaq. So I'm going to use the Nasdaq ETF for this position. So what I'm going to do is that when the market opens on the Tuesday session, I'm going to observe to see if there are signs that the market can potentially move lower. And then I'm going to execute a position that could take advantage of a fall in the price of the QQQ. So I'm going to execute a strategy that I've spoken about in a previous video known as a bear put spread. It's a debit vertical spread whereby I'll be buying a put option that's closer to the current price, and simultaneously I will sell a put option with a strike price that is lower than the current market price. And this is a low risk trade because in this situation I will potentially risk $1 to make $3. So if the market continues higher, my portfolio of long positions will benefit. This particular trade, it will lose a little bit of money. If the market moves lower, my long positions will suffer in the short term, but these are positions that I'm holding for the long term. This short-term trade to take advantage of a potential downward movement in the market will just make some income for me over the next few weeks or so. So that's all for this really short video. Bear in mind that this is just what I'm seeing in the market and what am I going to do about it. So like, comment, subscribe if you found this video to be helpful, and I will see you in the next video.